What's up, my friends? John Baruti here from... You know it. You know the name. Come on, let's say it together. Baruti Success. Today, this week, we're talking about... It's tax season. That's right. It's tax season. And we're talking about how side hustles and a business can save you a boatload of money on your taxes. Stay tuned. Here we go. So, it's tax season 2023, and you're all worried because the government has, sent the screws to us again. They've cut out a lot of the savings during the COVID stuff, and this year, we're not getting as much back. I don't know if your accountant or your tax advisor has told you this, or if you've gotten your taxes back already, but you're not getting back as much. I'm sorry. It's just not happening. They cut out a lot of that sweet stuff from COVID. Yeah, no more. No mas. Gone. Gonzo. See ya. Okay. So, this is to explain to you why you should have a business. Why you should have a side hustle.
But John, I don't understand. I have a full-time job. I can't do it.
Obviously, Sally's in the room. Let's all wave to Sally. Yes, Sally, I get it. You have a full-time job, right? I get it. That's cool. And that's how, believe it or not, most businesses are started. They start with a side hustle. And guess what, Sally? You get to write off a ton of stuff by having a side hustle or a small business. Now, you're saying to me, John, I don't understand. What do I have to do? I don't have the time or the money to set up this huge corporation and start a full-time business. Again, Sally. Not asking you to do any of that. All I'm asking you to do is create a small side hustle. Now, what does that mean? What does a side hustle or small business mean? Okay, let's go over it, right? So, Uber driver, you got a small business. Uber Eats driver, you have a small business. You sell stuff on Marketplace or eBay. You have a small business or a side hustle. You do not have to go and incorporate and create an LLC and do all this stuff. Now, the fact that you don't have to is fine. And I'm here to tell you, you do not have to. I like doing it, especially if I'm starting something new. I like keeping things separate. An LLC, basically all it does, right? It's not for tax purposes, believe it or not. It's basically for liability. An LLC allows you to not get sued by the people that are, let's say, servicing your business, right? So, if you're an individual and you're doing this side hustle or whatever, and somebody gets hurt or something happens, you're an individual and they can come after you. If your small business is in an LLC, then, and done properly, it does not pierce that company. Now, this all being said, I'm not an attorney. I'm not a finance guy, even though I've been in finance for forever. I'm not a CPA. I'm not a licensed finance guru or any of that. I've just been in business for 30 years. I've used all these tactics on myself, okay? And 30 years, haven't been put in jail, right? Because I use the tax law to the best of my advantage, right? That's why it's there. Everybody gets all worked up about these loopholes. They're like, oh, just the million and billionaires can use the loopholes. No, Carl. Carl's here. Hey, Carl. No, Carl. No, it's not for the millionaires and billionaires only. It's for you and me. The tax code was, believe it or not, written for the small business person. Now, I'm not political. The regime that's in, let's say they're not as business happy, both in New Jersey and in the government, right? That does not mean the laws are still there. Okay, those laws are still there. So there are many ways you can save money on your taxes by having a small business. Let's talk about them. Let's talk. Let's get right to it, okay? Now, this being said, before we get into it, the average tax preparer or the average small CPA it's not that they don't know about this. They don't know enough about it. And they feel uncomfortable using it, let's say. These tactics, these laws, these fully 100% legal avenues of cutting your taxes. So my suggestion to you is do your research, right? Watch videos like this. Later in the video, I'm going to give you a YouTube guy. He's a lawyer and an accountant. I'll just tell you now, his name is Mark Kohler. He talks about all this. I will link up one of his videos that talks specifically about something we're about to talk about putting your kids in your business. My suggestion is do most of your research and then give that information to your tax preparer and tell them, listen, I'm forming a business. Now, let's say 2023, which we're in right now, 2022, you haven't formed anything. You didn't do anything. So you can't get these benefits for 2022. But you absolutely can start now with a small business. And again, all those small things that I said, even if you don't have a business, here's the beautiful thing about it. Even if you don't know what you want to do as a business, you can have a business looking for a business. What? Yes, Sally. Listen to me. You can have a business looking for a business. So let's say you want to look into a franchise. Let's say you want to discover businesses that are out there. Let's say you want to, figure out what you want to do. All the things that you're going to use to research that. Let's say you buy a new computer because you want to research a new business. Deductible, 100%. You can deduct the whole thing. Let's say you're going to go on vacation. Okay, now listen to me. This one's a little tricky. You're going to go on vacation, but you don't know what you want to do as far as a business. But let's say you go to Disneyland, right? Now, I went to Disney with my family. We owned an ice cream store, right? So for us, we truly went there to look at everything they were doing, because who does it better than Disney? Sweets, ice cream, the decorations, how they set up their store. We followed that, the smells, all the things that Disney does. We went down and we wrote it off. Did we write 100% off? No, because some of it was a vacation. But we wrote off a good portion of it because when we went, we took pictures, we took notes, we talked about it as a family. These are the things that you have to do. And guess what? Yes, Sally and Carl, deductible. Let's say the vacation's 10 grand, right? And you spent 50% of your time researching and looking, and it doesn't have to be Disney, it could be anywhere. It could be anything that you're looking into. A portion of that vacation is deductible. Truly and 100% without a gray area. You're looking at forming a business. This is all in the process. Take notes, take pictures, get a binder, right? Or you can use something like Notion, right? It's a computer program to take notes and put your notes in there. As long as this is documented, you have the dates when you went to, again, let's talk about an ice cream store. When you went to this ice cream store or this candy place, you bought caramel apples, or you bought some candy because you wanted to try it. You wanted to see what they were doing. All these expenses are deductible. Make sure you document them. Make sure, especially, you're taking pictures. Put all that information into a file, either Google Docs, Notion, something like that, and call it soon to be business. All of this stuff is deductible because you're working towards a business. Now, this being said, the IRS wants you to try to make money, obviously. You can't just willy-nilly deduct things because you think you have a business. That being said, guess how long they give you? 3 years out of 5. You have to be profitable in so let me get this right. I believe within 3 years you have to be profitable out of 5. Okay? You lose money the first year, lose money the second year, lose money the third year. And again, make sure you're double checking with your tax preparer or accountant, and you can still write this stuff off. If you're doing this 7, 8, 9 years down the road and you didn't make any money, there was no income coming in, sketch. All right? Little sketch. Just telling you. So you need to actually try a business. And again, it's as simple as going out and doing Uber. Right? If you're doing Uber, your car, the deduction, the miles, the gas, the wear and tear on the car. Let's say you go out and buy, I don't know, let's say you buy water for your passengers, deductible. All the stuff that's around that, your cell phone, right? Because you have to, it's all on your cell phone, all these Uber Eats and all this stuff. It's all deductible. deductible. Now, my suggestion is you always have, and this is why I say it's not expensive to form an LLC. Again, you do not have to. But this is why I suggest that you have a business account. I've done another video, I'll link it up somewhere up here, of the best business checking accounts online. There's no fees with these things. You put $100 in there, and all of a sudden now you have a business, My Future Business account, right? And you start writing the business checks, you get a credit card for that business, all those expenses go through that business. They're separate from your personal, okay? And this makes you legitimate, okay? You will be amazed on, even if you have a few $1,000s in deductions, how this affects your taxes for a 9 to 5. It is absolutely amazing. Okay, now here's one that I absolutely love, okay? I have young children, right? They're not as young now. My son is 11, my daughter is 16, but when we had the ice cream store for the last 17 years? 17, because we sold it last year, yes. So for when my son was when both of them were 5 or 6, I put them on the payroll, legally. Now, what could my 5-year-old do? They could shred paper, they can file, they can take out the garbage, they came in, they swept, sometimes they helped carry the ice cream outside. They did multiple jobs. Also, in my office, they would come and help, so they were employees. Here's the beautiful thing with your children in that situation. Multiple beautiful things. First of all, you do not have to W-2 them, okay? Your accountant is going to tell you you have to W-2 them. You do not have to W-2 them. I will give you another video also from Mark Kohler that explains you do not have to W-2 them. You just have to expense them. So for me, child 1, expense, and I believe it's been a couple years since I've done it. So I believe when we did it, it was $12,500 or less. You did not have to even file taxes for them, okay? So what we would do is we'd write them a check at the end of the year, each child, and then the beautiful thing about it is you can't have an IRA, a Roth IRA, unless you have earned income, right? Well, Sally, your children now have earned income. Again, let me say it, let's say it all together, legally. They have earned income legally.
But John, they don't have working papers. They're not old enough.
Zip it, Sally. They're your child. They're your child. As long as you're not, now, here's the great thing that I'm not too sure. You can't work them 24 hours a day, right? My kids worked a couple hours a day during the summer, right? That's what they worked. You do have to give them a reasonable pay, okay? And again, all these particulars are something you want to research and you want to talk to your tax advisor about because there are nuances about them. But yes, a 5-year-old can get a check from your company, then have earned income, not have to file a tax return. They don't have to pay SUI, FUI, and all the payroll taxes. They don't have to pay any of that, right? And now that they have earned income, you can put money in a Roth IRA for them for college. Now, some tax advisors, some financial geniuses like 529 plans. I do not. There's multiple reasons I do not. Again, not a tax advisor, not a financial advisor, so take this with a grain of salt, but the 529 plans, they're tricky, right? And they have to be used for educational purposes. So yes, trade schools, secretary school, 4-year college, 2-year college, all of that they could use it for. But a Roth IRA can be used for all those things plus, right? If they want to take money out for a house, they can take everything except the earned money in the account. So let's say you've put $20,000 over the last 5 years into their account. And that $20,000 has made $20,000. So total, there's $40,000 in their Roth IRA. You can take $20,000, which is the money that you put in, and they can take it out with no penalties, with no fees, right? And they can go buy a house or a car or something with it. The money that it's earned, you have to leave in there until they retire, right? But all the money that you've put in, they can take out for college, for school, for books, for again, let's say they don't go to that, a trade school. Let's say they don't do anything. Let's say they are you're a multimillionaire and your kids are sucking off you. Well, Sally, they get to take that money out for whatever they want because it is the principal in a Roth. Can't do that in a traditional, can do that in a Roth. So that's why I love my kids having earned income that I can put into a Roth IRA. Again, check with your tax advisor and your specialist for all this information. Tax codes are constantly changing, okay? Make sure you do that. Also, you have your kids working for you. Terrific. Let's say your kids don't want to work for you. They're like, Daddy, I'm not doing that. Because again, I actually had my kids working, okay? So let's say they're like, yeah, not working, Dad. Okay, no problem. Would you be on the advisory board? What? What are you saying? What? Yeah. Ask your wife, ask your husband. I need an advisory board for my business, right? We are going to meet once a month and we're going to discuss all the things about business. What does a 5-year-old and a 11-year-old or a 16-year-old know about business? They know everything. If you're in an ice cream store, like we were, you know what they love going to? Ice cream stores. And you know what's terrific getting a perspective of? A child that goes to the ice cream store. So when you're thinking of adding a flavor or adding a different design or adding a color or changing something, you sit down with your family, your advisory board, and say, okay, Baruti family, this is what we're thinking. Little G goes, yeah, I don't like that flavor. My daughter goes, I love that flavor. My wife's a tiebreaker, and I'm like, okay, we'll go with it. That is a meeting. Make sure, again, you're taking notes. You have either on your computer with Google or Notion or however you take notes, or you have a book. Board meeting book. You need to have documentation. Now what? Well, yeah, they can get compensated for being part of your board. Yes. Now, can you cut a $12,000 check for your son or daughter that's part of your advisory board? No. Have you had a meeting every month for the last 12 months and you've taken 3 hours in those meetings and you could pay them? I don't know, can't do the math. I don't do public math on the fly, but let's say, can you pay them $3,000 or $5,000 for the whole year? Yeah. And guess what? You can take the money you're paying your children, right? We would put it into an IRA. You then could take that money. You were paying for stuff for your children anyway. You were buying them clothes, you're buying them sneakers, you're buying them computers, you're buying them all those things. None of them were deductible. Now, you're paying your child, you're putting it into their bank account. You have them pay for those things, right? So now, you're paying your child. Let's say you're going to put a portion of it towards an IRA, and all the things that you were buying for them that were not deductible because they're just your children, now they're part of your corporate structure. Legally. Did I say that? Legally. Again, you can't get crazy with any of this stuff, right? You have to be reasonable and within reason, right? But you can spend money on their computer. You can spend money on their phone. You can spend money on all their things through their paycheck. Now, you're paying them anyway. Now, you've used that money as an expense in their salary, and you're going to use it for the things you're going to buy them anyway. Yes, I don't want to keep saying it. It's legal. I'm going to hook again. There's many more people out there but Mark Kohler, but I think, to be honest, he's one of the best in explaining it. And, he's not afraid of the IRS. And again, the IRS doesn't want you to be afraid of them. They want you to use the rules that are in their books. And a lot of people don't understand them, so they get scared. You do not have to be scared, right? You just use the law the way it's stated, and you can save thousands of dollars on your taxes. Okay, now I want to talk to you about Section 179 of the tax code. Section 179 of the tax code allows you to, very similar to what we're talking about, deduct things that you've maybe financed for your business, right? But you can deduct the whole amount in that year. So let's say you bought QuickBooks, or let's say you're buying QuickBooks Online, and QuickBooks Online for the whole year is $400. You can deduct that, the whole amount, and then pay for it as needed. Let's say you need a car for your business, right? And you're going to spend more than 50% of the time with that car for your business. Now, there's some regulations on this. You need to look them up. But guess what? You can deduct the car all at once, even though you're financing it for 3, 5, 7 years. Let's say it's a $40,000, $50,000 car. Yes, you can deduct it for that year all at once, even though you're paying for it over time. Now, there are certain things you could do. Software for your business. I don't believe it can be custom. Again, all you have to do is Google Section 179, IRS tax code, and all the things that you can deduct all at once are in that code, right? This is a beautiful code. And let's say you go buy a piece of equipment. Let's talk about the ice cream. No, let's talk about the bakery this time. I bought, what was it? It was a couple $100,000 roll system, right? Well, the roll system was not brand new. It was used, but it was new to my company. As long as it's new to you, it doesn't have to be brand new. As long as it's new to you, you can deduct, again, that I bought it. I wrote a check for it, so I didn't finance it. But you can deduct that in 1 year. Let's say your normal person finances something like that for 10 or 15 or 20 years. And even though you're financing it for that period of time, you can write off the whole amount. And I think, don't hold me to this, it's something like 1.5 or 2.5 or in that range of assets that you can write off in the same year. To 1.5 million to 2.5 million, somewhere in that range. It's insane, okay? So these rules are phenomenal. And obviously that's not for a side hustle. That's if you have a full-time business. But here's the thing. You driving Uber and you bought a brand new electric car for Uber. I had an ice cream customer that did this situation. I was talking to him. This is years ago when I owned the store. We're outside discussing business, as I like to do. He bought the car. It was a Tesla. He wrote off the whole Tesla that year. Again, that's what he did. That was his side business. He wrote off the $40,000 Tesla in that year. All legal. As a business person, you have a small business. Now you're taking advantage of small business retirement. It is not the same as your normal IRA and Roth. As a business owner, you're allowed to have a larger retirement. Again, you need to talk to your tax advisor. You can put a poop load of money away in multiple ways for retirement. It is much different than being single or married. Inside a business, there are multiple ways you can save more money for your retirement, which is phenomenal. Let's say you have a full-time job, and let's say that full-time job pays for your lifestyle, pays for everything, but you have a side business, and this side business is for vacations and putting away for your retirement. Well, Sally, you can almost double or triple how much you're putting away for retirement if you own a business. Make sure you talk to your tax advisor. Make sure you talk to your finance person about this. It's amazing the amount of money you can save. So these tips are the tip of the iceberg for a small business and a side hustle, right? This is just the beginning of how much you can save in taxes by owning or starting or looking for a business. It is phenomenal. It's too late for 2022 if you didn't start it right now, but if you form it this year and you start looking or spending money towards it or doing things, towards a business, again, separate it, get a separate checking account, put owner's equity in there, which means you're going to be dropping money in there, let's say 500, 1,000, whatever. You don't have to, but I'm just saying you have money in that account because anything for the business, you want to run through that business checking account. Keep it separate, keep it clean. This way, when the IRS comes knocking, you don't say, oh, look at John's video. This is what he said. No, Sally. You go, here's my paperwork. Here's all the tax code. Here's all the things I'm doing right. And then the IRS is going to go, And a lot of times, you can go to the IRS and say, I was being conservative. You want to give me an audit? No problem. I've done everything to the T. Let's look exactly at what my expenses were. And amazingly, they might owe you money, right? Because most people err on the side of cautious because everybody's afraid of the IRS. So when they do come knocking and you do have a tax professional go over everything, as long as you have your paperwork ready, you have your notes, you have the pictures of all the things you're doing, right? You did nothing wrong. It is in the tax code for all of this stuff, okay? So I hope this was helpful. I hope you form a business this year, and I hope next year's taxes you owe zero or they give you money back. All right? We'll see you on the next one.
Ooh, I'm gonna owe zero taxes. Ooh, yeah, maybe they'll owe me money. That would be nice.
I'll see you on the next one.